Welcome to Stuck, Time to Improv. I'm Mary Scott with Business Riff, and I want startups to be wildly successful. So today we have Frank Hopper from Capital Innovators, and we're going to be talking about what investors want to know from startups, or better yet, what startups need to know so that they don't waste investors' time. Hey, Frank.
Hey, how's it going?
Good, good. I'm so glad you could come today because you're at a big conference, right?
Yeah. I'm down at GeoInt in at downtown St. Louis this week.
Okay, so let's talk a little bit about Capital Innovators. What is your specialty that you're looking for?
Sure. So, Capital Innovators, we've been around since about 2010, and we've been investing in early stage pre-seed seed companies since then. We also operate an accelerator program. So, with our earliest stage investments, we put them through an accelerator program. It's a 12-week boot camp style program where we help companies kind of build the foundations that they need and the foundation that they need to then scale post-program. We invest in all kinds of different things. So we're vertical and industry agnostic. We invest mostly in technology companies, but every now and then we'll do a consumer packaged good. We also, folks might be familiar with us because we operate accelerator programs for large corporations. So we conducted the Ameren Accelerator. We did 3 cohorts of that program. That program was focused on energy startups and startups with technology pertaining to smart cities. And then we also conducted the NGA Accelerator, so an accelerator focused on companies that were servicing the NGA mission. So the National Geospatial Intelligence Agency is a large defense and intelligence agency. Their West headquarters are located here in St. Louis, and we help them find startups that pertain to their mission and help them achieve their mission better, faster.
Okay, so these accelerator programs that are operated by you under the auspices of another big company are so that the big company will eventually buy the startup, or how does that work?
Each big company has its own goals, right? So Ameren's goals were to get access to early technology, to kind of see what else was out there in the industry, in the energy space. They were also looking for companies that were innovating in a way that would help them do their jobs. So predominantly what we looked at were energy related startups. So startups like we invested in a battery company. We invested in a company that was retrofitting diesel engines to run on ethanol. We invested in a company that was making sustainability practices a service. So sustainability is a service. But we also invested in a construction company, a company that was like fleet management, because Ameren has a ton of trucks, right? And they have their own construction projects. And so they invested in that company. So it wasn't really energy, but it made a lot of sense to them. So that was Ameren. NGA, they have several goals. One was just to bolster the geospatial ecosystem in St. Louis and nationally. National security and intelligence relies on innovation. And for innovation to happen, we have to be investing at the earliest stages and giving those companies the fighting chance. And this was one of the ways that they did it. They were also looking for early peaks into technology that was being developed that they would use one day. They were also hoping to influence that technology. So helping the way that you build a product or technology for the federal government, particularly in the defense sector, is very different than how you would build it for a consumer. So helping to influence that was important to them.
Okay, does Capital Innovators run its own accelerator in addition to these?
Yeah, so that's how we got started. We've been running accelerators since inception. We're actually on a little bit of a pause right now. We're getting ready to go raise a fund of our own, another fund. So we've raised 3 funds so far and wrapped up the deployment of early stage capital in that fund at the end of last year. So we're getting ready to go raise the next one. We expect to launch the fund in the fall and start making investments then into early stage companies.
So how do startups get to be part of your cohort?
Yeah, so we run an application process for all of our accelerator programs. It's based on an application process. We ask a series of questions. We take a video pitch. it's a pretty straightforward process, similar to that of like Techstars. A lot of accelerators operate on this application process. For our later stage investing, we do later stage investing as well. We're investing into pre-Series A or Series A companies, and for that, we don't run an application process. We take referrals, we take cold emails, and then we just have like a standard pitch and diligence process for that as well, though.
Okay. So what's the difference between an accelerator program and just a straight investor?
Sure. So both come with capital. The accelerator program is a structured 12-week program. Think of it as a boot camp or like a mini accelerated MBA for your company. The investment, we tell our companies whenever we invest in them, we're here to be as much of a resource as we can be, as you need us to be, but there is no program tied to it. So anything that they would have had access to during the accelerator program, they still have access to. We would connect them to any of our mentors, any of our perks. If they are looking to gain access to any of like the learning sessions that we would normally do, we would loop them into that, but there's no like standard 12-week process. It's more of ad hoc as needed for our later stage investments.
Okay. And do you take a percentage of the company? And what's the usual grant amount that companies get?
Yeah. So for our programs, they're all equity based. We invest $100K into a company at the accelerator stage. And then for our later stage investment, we invest anywhere from 250 to $1 million. It's kind of a big range, but it just kind of depends on the startup that we're looking at and the stage of business that they're at. We take equity. We're open to other forms of the investment, so convertible notes or safes. Done plenty of all of the above.
Okay, so startups need to know that this money is expected to come back to the investor. Plus,
absolutely, yes.
That's what investing is. They're going to give you money so you do something, and you're going to pay them back plus.
Yes.
Right?
Yes, okay. Absolutely.
How big is a cohort?
Our program is typically 6. We'll do as many as 8 in ours, but almost always 6. NG Accelerator was always 8. That's what we were contracted for, so that's what we did. And the Ameren Accelerator was 6 or 7.
Okay. And do startups go to your website to find an application or get on a mailing list?
Yep. Yes. So whenever we have an application live, they're always posted on our website. That's the best place for information. You can also always reach out to the team. We're a small team, but try and stay on top of communications with founders that are interested. You can find us on LinkedIn or our website.
Okay. And one last question. What's the biggest mistake startups make?
Gosh, if the deck isn't clean, if the application is thin, if it's work that you're not proud of, it doesn't look like if I look at it and that's not work that I would be proud of, it's a tough one. If you don't answer the questions fully, if there are typos in the questions, I can excuse a lot of typos in email. I'm happy to excuse, but in something like that, I appreciate a hard look at things. Thoughtful answers are meaningful to me. If you're doing something very serious, I want to see a founder that's taking it very serious. I take my job very seriously and returning to my investors, so I want the founder to feel the same way. Great.
Well, thank you very much, Frank Hopper from Capital Innovators. This is Mary Scott with Business Riff, and one of the best things you can do to become wildly successful is book a synergy call with me. And join us again next time for Stuck, Time to Improv.